All right, how's it going, everyone? My name is Amos. By the way, I spent like 4 hours at the beach today with the family, so I'm a little sun-drained. I feel really tired and calm, but it doesn't matter because I asked you guys very recently on the YouTube community post tab about I'm a man of the people. What stock deserves the next deep dive and analysis video? And about 295 of you participated. 61% said Adobe. So today, we're going to be talking about Adobe. We're going to be calculating their inherent worth as a stock, and then towards the end of the video, I'll be going over my game plan. And for most of us out here, you're probably like, why Adobe? Well, year to date, negative 21%. We go 1 year out, negative 31%. But I want to show you something absolutely ridiculous about Adobe. Ticker symbol ADBE. 5 years. Dude, they were almost at I think they did penetrate $700 a share back in 2021. Dude, they're 346. What the heck is going on? When I see a high quality compounder going on a dip like this, it naturally makes me curious about, is it a good time to buy into them? Should I buy the dip because of that rebound rally, or is this a falling knife? But if we zoom back in for the past 1 year, the reason why they're getting sold off is that AI video and image generation from their rivals, their peers, and from all of these various startups, it's gonna make Adobe obsolete. And that creatives, photographers, videographers, YouTubers, and etc. will eventually be out of a job. Which means if their customer base can't use their products as they can't have a job anymore, then that means Adobe is going to miss out on their revenue as well and ultimately make Adobe fall off. But I think it's worth investigating a little further because when we take a look at Adobe's total return, obviously for the past 1 year, hideous, atrocious even. But if we go back 15 years, then we're talking about a 1,200% return. And that's in face of the sell-off that they have been going through. So what I'm saying is prior to that sell-off that occurred in 2021, their total return was 2,500%. So they lost almost half of their gains in the span of about 4 years. That is absolutely crazy. But what you have to keep in mind is when you look at Adobe's CAGR, the compound annual growth rate, in comparison to the S&P 500 past 20 years, Adobe's has been 13% year over year. In comparison to the S&P 500, 10.9%. In the past 15 years, 18% to that of 14.5%. And it's only in the recent years has Adobe underperformed that of the benchmark and the standard, otherwise known as the market, the S&P 500. So for me, I really want to investigate further. Are you ready? Let's go ahead and get into it. But let's back it up a bit and talk about what exactly is Adobe and how do they generate revenue. So in a very simplified manner, Adobe is a software company with 3 revenue-driving business segments. Number 1 is the digital media arm of the business. It's accountable for about 74% of their gross sales. And this includes their creative programs to edit videos and photos, but also the PDF-related services. For most people out here, when you think about Adobe, you associate them with the digital media arm of their business. Number 2 is the digital experience, and it's responsible for about 25% of their sales, and it's basically their data analytics software to do CRM-related tasks. So kind of like Salesforce, but not really. And they also have a very small, insignificant third arm of the business known as the advertising and publishing segment. And it's responsible for about 1% of their sales. And this includes their DSP. That's very similar to the Trade Desk in some ways. I think what makes Adobe special is that their ecosystem of products can communicate with one another in a very easy way. It's integrated with one another, and I think that's their economic moat. It's a one-stop shop with Photoshop, Premiere Pro, Animator, and if you want to publish your advertisement online, you can also gather the customer analytics and data to see how it's performing. And once you get up to speed on utilizing and familiarizing yourself with the Adobe interface, you wouldn't want to really switch to another software and then start from scratch. Once you get really good at using Photoshop, you're not going to want to use the peer and the competitor, cheaper. Does that make sense? That's their economic mode, the high switching costs. And now let's go ahead and talk about the recent developments surrounding Adobe. They just posted their earnings not too long ago. The earnings is basically a snapshot of the financial performance of their operations for the past 3 months. And I gotta say this. It was bullish across the board because they beat on the top and the bottom line. Amos, what does that mean? The top line is their revenue expectations. They smashed past it. The bottom line is their earnings, their profits. And once again, they smashed past those expectations. And it was their highest earning quarter ever, as you see on your screen right now, posting $5.9 billion of revenue. And their integrated AI features like Firefly are being widely praised by their customer base. Like, dude, we love your stuff. According to the Adobe's leadership team, it's almost as if AI is not a threat, but a tailwind. Because how can you post your best financial performance ever in light of AI killing your business model? That's the narrative, remember? How can you do that? How can your revenue go up 11% year over year if you're apparently dying to AI? Because I'll say this, as an active Adobe product user, there is AI in every setting, feature, and they're constantly rolling out new updates. It's not like Adobe is resisting AI and saying, we're not going to integrate it into our features. No, they're at the tip of the spear. They're embracing AI. And now it's that time of the video where we're going to be calculating an inherent worth for this stock. Like, how much should Adobe be trading for based on their financials and fundamentals? Not based on speculation or narrative or stories, but based on their own data and numbers. Well, first up is going to be their discounted cash flow analysis. Basically, predicated upon their free cash flow and the growth thereof, we're going to spit out an inherent worth for Adobe. So essentially, their free cash flow is going from $5.3 billion, which they posted back in 2020, to in the trailing 12 months, $9.5 billion. Year over year, when you break that down, on average, their free cash flow is growing at a rate of 13.2%. However, on this channel, if you're familiar with my style, I always like to shave and be a little conservative. So instead of posting 13% into the growth rate of their free cash flow going forward, I'm going to instead say 9%, which is the lower end of their estimates of their growth going forward, and based upon what some analysts are arguing as well. Like, this is the bear case for Adobe. So in a bearish setting of their free cash flow growing at a rate of 9% year over year, then it should be worth $538 a share. Friends and family, they're about $200 lower. They're nowhere near 538 bucks. And I did write in my notes here, I want to call this out. They do have a crap ton of stock-based compensation, because I know we're going to have some people comment down below talking about it, mentioning, and calling it out. However, they're making up for it by increasing their free cash flow per share year over year by a significant amount, which takes into account the shares outstanding. They're still crushing it. So even if they're diluting the shareholders by giving stock-based compensation for their employees, RSUs, and to their leadership team, I don't think it's a bad thing, because I have a very unpopular opinion when it comes to stock-based compensation. Almost everyone out here, they hate it. Me, I really like it. Because when you think about it, it aligns the best interests of the employees with that of the shareholders. Because nobody wins unless the share price goes up. Correct? Which means this is in the best interest of the employees that are given that stock-based compensation to take care of the operations and to do their work diligently so that the share price goes up. And if the share price goes up, then as a shareholder, we win too. So I think it's a good thing. Other people don't see eye to eye with me. I love to see stock-based compensation, especially if their free cash flow per share is keeping up. And in the case of Adobe, it's outpacing it by a huge margin. And we're going to do a deeper dive into their numbers towards the end of the video, because I don't want to lose people, because whenever I talk too much about numbers and data, I know your eyes start to glaze over. So we'll save that for later. So that's the intrinsic valuation model number 1. We're going to do one more, and that's going to be based on their earnings per share, otherwise known as the profits per share, also known as what? The bottom line per share. Now, for the past 15 years, on average, Adobe's PE ratio is 43.6. If we zoom in and only consider the past 10 years, then we're working with 41.3. Today, friends and family, their PE ratio is at 21.6. It's nearly half that of their historical average. Now keep that in mind. So Adobe's full year guidance for their EPS 2025 is on average $21.26. Instead, I'm going to go ahead and make the assumption that they're going to fall short of that, even of their low expectations of $20.37, but instead post $20 of profits per share. So $20 of EPS, and rounding out the year with a PE ratio of a 20, so in about 2.5 months from now, then Adobe's realistic price should be $400 in a bear case scenario. Now, for whatever reason, if the narrative and the sentiment changes surrounding Adobe and they go back to their historical PE ratio of about a 41, 43, and in this case, a 40, then Adobe could, I'm not gonna say statistically it's gonna happen, but they could hit $800. Probability-wise, very low chance of that happening. I think when it comes to Wall Street and big money, I think they're pretty fearful about Adobe and every other software company out there, including Salesforce and anybody else in the SaaS space. It's not just exclusive to Adobe. If I were to make an educated guess, I would say that Adobe would probably finish out the year somewhere around like 410, 420 a share. Probably a little higher than the very bearish forecast of 400. But worst case scenario, they should be around 400. I mean, they're 350 right now. So to go up at $50, not the biggest upside, so I think it's manageable and could happen, but I guess we'll see, because software companies could continue their downward spiral. Now, for next year, 2026, the average expectation for their EPS is $23.88. What I'm saying is that their EPS will grow 5% year over year and be $21 instead. Now, if they continue to trade for a PE ratio of a 20, then they should round out 2026 at $420 a share. In a worst case scenario, in my opinion. That's not financial advice. It's just based upon the data that we're working with. And if we fast forward to 2028, if they do in fact post $24.49 as their EPS, and they still trade for a 20 PE, then Adobe could be $489 a share. Right now, they're about $350. So they do have a pretty significant amount of upside to get to that point. So my takeaway from the intrinsic valuation models is that no matter how you spin it, twist it, pop it, or manipulate it, Adobe is undervalued according to their numbers and fundamentals. You can't argue it. They are undervalued according to the data, which I would argue is a perfect time for us to transition to the next segment of the video. Where does Adobe belong in the compounder chart? If they go on the left side of your screen, that means they're going to be a certified compounder, meaning my money invested into Adobe is going to 235x given XYZ amount of years. Simplified words, $100 invested into Adobe will turn to $200 with enough time. If they go on the right side of the screen, the Kager graveyard, that means it's not really a smart usage of my capital. To buy into Adobe, I'm probably going to see like a 1 or 2% gain year over year. And all of the companies that you see on your screen right now are the various businesses that we covered on this channel in the past like 4 to 5 months. So if you look at my YouTube channel history, you can find the respective deep dive and analysis for any one of them. When it comes to Adobe, this is going to shock you. Where do you think they're going to go? Bullish or bearish? You ready? I think Adobe belongs in the bullish certified compounder group. Now, they're not all the way to the left with Google, but they're somewhere in the middle, slightly behind the trade desk. I would argue about in line with the Oshkosh Corporation. Now, here's why I'm bullish on Adobe. Their timeline, their history, their DNA, up until recently, they've been an outperformer in the market. Yes, if you only look at them with a biased lens of like the beginning of 2022 up until now, a piece of crap. Ugly, hairy, hideous, I want my money back. But prior to the end of 2021, your money invested into Adobe was a compounder. But disregarding, the past performance, because it's not indicative of future gains, when I started to dig into this company, come to find out their AI models make images and videos that are commercially safe. That's the key word there, commercially safe. Adobe's AI models for their creative software, it's not trained on anyone's private data. And when you think about it, the companies that are using Adobe's AI, they really appreciate that because nobody wants a legal battle with something that AI created for their online ads or for their marketing campaign. They want to use something that's going to be safe. Whereas other AI models, you can't really say the same thing. And that's why I think really soon, I think laws are going to be passed that will prohibit what AI can and cannot do. Because I think AI can be a slippery slope. You could use it for good, but you can definitely use it for harm. Because I know, like, if you're a musician or an actor or anybody in the creative space, AI is kind of coming out there to eat your lunch. The other day, I was listening to like a 1950s doo-wop playlist on YouTube, and I was like, dude, this is sick. Come to find out, it was made by AI. As soon as I found out it was made by AI, I clicked dislike and I blocked that channel. Never recommend me that content ever again. But all that to say, AI has definitely changed the name of the game. Sooner than later, I think regulation will be passed in order to protect creative individuals and corporations and etc. And so when I think about it in the scope of an enterprise business like Nike or Adidas, they're not just going to use a willy-nilly AI image or video generator because they can get into a hot steaming dump of a mess if whatever that is has not been commercially safe. And that's why I think Adobe, they're way ahead with their development of these models that creatives are currently using right now. And I think that's a differentiator that people are not giving Adobe enough credit for. Because even if we do move down the path of utilizing AI more and more, as a Fortune 500 company, you want to make sure that whatever it is that you're posting that was generated by AI is safe to use and to commercialize. If it's not, they're screwed. And that's why I think more and more companies are going to trust Adobe's AI and their products. And I think now it's a perfect time for us to talk about my game plan. What am I going to do after learning about all of this of Adobe? And as I talk about it, now I want to do a deep dive into their numbers. So I recently covered PayPal on the channel, and they really do remind me of Adobe because not only are their numbers so shiny, so bright, and growing year over year, but their fundamentals are also very sound, right? But similar to Adobe, PayPal's pretty much near their 1 year low. I mean, they're trading for $69. They used to be about $300 a share. Very similar boat as Adobe. However, when we jump on over to Adobe and take a look at them, all else being equal, PayPal versus Adobe, I would go with Adobe. And here's why. I want to address this up front. I'm not turning a blind eye to Figma, Canva, Photor, and all of the other competition that's sprouting up. What I'm saying is Adobe and their products are best in class, and they're industry standard in the professional space. I guess one could argue DaVinci Resolve is up and coming, but it's not standardized as best in class. Like if you go to school for digital advertising or a film school or an acting school, everybody uses the Adobe product suite. So the key distinguishing feature about Adobe versus the competition is that they're best in class. Now think about it like this. When Google rolled out their own Office product suite that imitates Microsoft, did Google Sheets destroy Microsoft Excel? No, it did not. They have an entirely different customer base. I would argue Microsoft Word, Excel, and everything in the Microsoft ecosystem is integrated into most enterprise businesses and Fortune 500 companies. Whereas like the Google Office products, I think it's more appropriate with like students or people who need to use an Office product at home, right? So very different customer demographic. And based upon my research, Adobe and their products are super deep into the ecosystems of most major companies here in the US. So I worked at 2 different Fortune 20 companies, and both of them utilized Adobe for almost everything that we did. Now, I wasn't on the marketing team, but I did partner with them closely. Every online campaign and video was, in fact, cultivated on an Adobe product. So when I think about Adobe, they really do remind me of Cisco. Even if there's better alternatives out there that seems to be cheaper, enterprise customers are just gonna stick with them because of the high switching costs that we talked about earlier. Because if your entire team, it took them like 3 or 9 months to really get up to speed and become experts on how to use all the various software in the Adobe ecosystem, do you really think they want to jump ship to an Adobe rivals product to start all over again, to start from scratch? No, they are not. Maybe at a small startup, that could happen. Maybe at a small or medium-sized business, that could happen. But when I think about the S&P 500, every single one of those companies, they're not going to switch for the most part. So even if Adobe does lose some revenue from individuals like you and I, the retail investor, quitting and saying, I'm never going to use an Adobe product ever again, I would argue, based on the numbers that you are seeing on your screen right now, the growth rate quarter over quarter, year over year, you see how it's going up double digits in almost every single category. I would argue Adobe is going to be able to retain most of their B2B customers. Because just think about it. Yes, the dad who uses Photoshop, Adobe's Photoshop, to enhance family photos once or twice a year, yeah, he's going to cancel. It doesn't really make sense to pay that subscription fee every single month when you don't really use that product that often. But when you think about the thousands of advertising agencies around the world, fashion brands, clothing brands, marketing teams, they're not going to jeopardize their workflow on unproven AI startups or onto Canva. Like Canva and all of the other web browser-based image editing software, dude, it's not as dense and as feature-heavy like Adobe. Like if you're a casual user, it's fine. But if you're an S&P 500 company, you are not going to be using Canva. Because as someone who uses Adobe products almost every single day, they have every feature and setting to customize your project exactly the way that you want it. You don't really like the way that the resolution is, or the contrast, or the brightness. Everything down to the minute detail, you can adjust with Adobe. The competition, you might be able to do the high-level stuff, but not the very detail, intricate stuff, if that makes sense. And I think the most compelling argument going for Adobe is their numbers. I think it speaks volumes and it speaks for itself. Just taking a look at their top line in 2015, $4.7 billion, highly respectable with a capital R. Now it's $23.1 billion. Oh my goodness, every single year without fail, it seems like their revenue is going up. Now, obviously, in 2018, 2019, the growth rate was like 20%, 20%, whatever. Now it's 10%, 10%, 10%. It did slow down a little bit, but it's still growing at a very beautiful pace given their scale. At this point, they pretty much penetrated every single major corporation in the US. And the fact that they can still grow their revenue at a rate of 10% year over year, I think that's really good. It kind of reminds me, in a way, of like Google. Because up until the most recent rally that Google experienced, a lot of people were bearish about them. They're like, dude, AI, they're gonna make this company obsolete, useless, and no one's gonna use them ever again. And Google's numbers are also growing at a rate that's pretty much comparable to Adobe. But as you can see, like up until, I don't know, about their most recent earnings, they were roughly like $200 a share, and then bam, they went up to the moon, right? Because now we're learning that AI did not make Google useless. And then I also think the monopolistic antitrust probing, it went in their favor, which I did talk about into depth in other videos. So they had a lot of factors go their way. So the sentiment surrounding Google has changed for the positive, and now people are bullish about them once again. And that's why I kind of feel like that's going to be the same story with Adobe, because that's just their top line. If we scroll on down and take a look at their bottom line per share, which is their EPS, I mean, come on, friends and family, $1.24 in 2015 to what it is right now, $16.05 in the past 12 months. And they're supposed to finish out the year at about 21, maybe like 21.50 a share. I said $20 in my calculation and in my forecast model. This is going to grow at an exponentially higher rate year over year. This is just the beginning, because when you think about their gross margin, right? In the past 1 year, they generated $23.1 billion, and the overhead cost to generate that money was $2.5 billion, which means their gross profit is $20.6 billion. Dude, that gross margin is absolutely ridiculous. Yes, it's a software company, but dude, $20.6 billion of gross profit. If we jump on over to their balance sheet, their cash and cash equivalents pretty much stabilize at about $5.9 billion. I wouldn't say that it's the best thing in the world, but it's far from being the worst. And if we jump on over to the cash flow statement and we take a look at their free cash flow per share, this takes into account the shares outstanding and the dilution. $22.14. That is magnificent. 2024 was $17.51. And that's why I'm saying if we scroll up and take a look at the stock-based compensation, even though the stock-based compensation is growing year over year, I don't think it's the end of the world because the free cash flow per share, taking into account the shares outstanding, is $22.14. I mean, the growth rate of the free cash flow is 46% year over year. What is there not to like about Adobe based on their fundamentals and numbers? Because, friends and family, if you want to see a company that is dying to AI because AI has absolutely disrupted their business model, I'll show you. We're going to be talking about Chegg. Chegg is an online company where essentially it helps you with your academic classes in college or in high school, and it helps to optimize your notes for an upcoming quiz or an exam. But guess what, friends and family? Students across the nation, they're no longer utilizing Chegg, which if I zoom back 5 years, take a look at this. They used to be over $13 a share. Dude, they're a penny stock now. It's $1.58. Students no longer use Chegg. They use ChatGPT. They use Gemini, which is the AI chat language model integrated into Google search. AI has disrupted their industry. This is the big difference. If AI is truly out to disrupt and kill Adobe, why do their numbers not look like Chegg's? Because Chegg's, ever since AI rolled out in 2021, it's only been declining at a very aggressive rate. $500 million in the past 1 year doesn't sound too bad until you take into account that in 2021, it used to be $776 million, a growth of 20% year over year, but it's only been declining year over year. So for Chegg, AI has absolutely come out, put them into a chokehold, and they're tapping out. I think Chegg is done. Their business model is just not relevant anymore. I mean, take a look at their free cash flow per share. This is atrocious. It's declining. Ever since 2023, it's dropping fast. This is a company that is not making cash anymore. You tell me, does this look like a company that's dying in the hands of AI? Be honest. Like, have no bias or emotional barrier. If you just look at it objectively, if AI is out to eat their lunch, if we break it down on a quarter over quarter basis, then why does it keep growing? Why are they printing cash? So I'm gonna stand on my tiny little floor mat and say this: AI is not bad news for Adobe. As a matter of fact, as a creative that uploads YouTube videos every single day, I think AI is only going to enhance and make them better because they're integrating it into their ecosystem. So for me, I think I might buy into Adobe. I'm not sure if I want to or not. The conviction is not the highest, so I will be monitoring them. But I feel like as of right now, it's not a bad spot for me to jump in, but I need to do a little more homework. And of course, look at the other stocks on my watch list to see if Adobe is the best play right now. But that's me. I want to hear from you. What do you think? Do you like Adobe? Are you invested into Adobe? Are you bearish? What have I got wrong? If you know anything about me, I am open-minded and I'm always willing to change my opinion about anything in life if, in fact, I am wrong. I walk around with an open mind, knowing that the next person that I meet could be smarter than me, better looking than me, smell better than me. I am just a student in life. So if I have it wrong, let me know, because I think they're undervalued, but I'm also an idiot, so what do I know? But anyways, before I sign out of here, I wanted to give a shout out and publicly praise Shandar and Noah B for helping out and buying some items on the baby gift registry. Thank you guys so much. From the bottom of my heart, I appreciate you. Thank you. If anybody else wants to buy a book or two for my daughter that's coming in about like 2 or 3 weeks, the link will be in the pinned comment, the Amazon baby gift registry. If you do, that would be sick. And if you don't, it's okay. Even just watching the video all the way through, I appreciate you. Now with that said, stay safe, good luck in the stock market. I love you guys. I'll talk to you really soon. Peace.